Ever wondered how to amplify your exposure to the S&P 500 Index? Enter SPXL, the ticker for the Direxion Daily S&P 500 Bull 3X Shares ETF. This exchange-traded fund is an ingenious instrument designed to offer investors leveraged exposure to the performance of the S&P 500 Index, a benchmark widely followed in the US stock market. Introduced by Direxion, a leading provider of leveraged and inverse ETFs, SPXL aims to deliver a daily return of the S&P 500 Index, magnified threefold. This potential for amplified returns during market upswings can be an enticing prospect. But remember, with great power comes great responsibility. Leveraged ETFs like SPXL are designed for short-term trading, and their daily return compounding effect can lead to increased volatility and risk. They may not be the ideal choice for long-term investors. So before you dive into the world of SPXL, it's crucial to carefully assess your risk tolerance and investment objectives. Let's delve into the performance of SPXL. This exchange-traded fund designed to provide investors with leveraged exposure to the performance of the S&P 500 Index has some compelling figures to consider. Starting with an initial balance of $10,000, the final balance has skyrocketed to a staggering $312,513 over the 12-year period. That's a compound annual growth rate of 27.5%. However, as with any investment, there are also risks. The standard deviation, a measure of volatility, stands at 46.04%. The best year for SPXL saw a return of 118.37%, while the worst year saw a decline of 56.55%. The maximum drawdown, which measures the largest single drop from peak to bottom in the value of a portfolio, was 62.59%. The Sharpe Ratio, a measure of risk-adjusted return, is 0.75, while the Sortino Ratio, which differentiates harmful volatility from total overall volatility by using the asset's standard deviation of negative portfolio returns, is 1.17. The market correlation is 0.99, indicating a strong positive relationship with the market. When compared to other leveraged ETFs and a regular ETF, SPXL still holds its own. The ProShares UltraPro S&P 500 ETF, for instance, ended with a slightly higher final balance of $322,721 and a similar compound annual growth rate of 27.79%. The Invesco QQQ Trust, a regular ETF, ended with a final balance of $109,225 and a compound annual growth rate of 18.38%. The expense ratio of the index stands at 1%. This represents the annual fee charged by the fund to cover operating expenses. As we can see, SPXL offers the potential for high returns, but with a corresponding level of risk. Let's take a look at the composition of SPXL. The Direxion Daily S&P 500 Bull 3X Shares ETF, represented by the ticker SPXL, holds a diverse range of stocks in its portfolio. However, certain titans of industry hold the top spots, reflecting their influence in the market. The top 10 holdings of SPXL include some of the biggest names in the tech industry, with Apple leading the pack at 7.03%, closely followed by Microsoft at 6.98%. Other notable names in the top 10 holdings include Amazon, Nvidia, two classes of Alphabet, Meta Platforms, Tesla, Berkshire Hathaway Class B, and JP Morgan Chase. These companies together form a significant portion of SPXL, with Apple and Microsoft alone making up nearly 15% of the holdings. This is a testament to the impact that these tech giants have on the overall performance of the S&P 500 Index and, by extension, SPXL. Moving on to the sector weightings of SPXL, it becomes apparent that the information technology sector is the most heavily weighted, comprising 28.86% of the fund. This is a clear reflection of the increasing dominance of tech companies in the current market landscape. Following information technology, the financials and healthcare sectors represent the next largest portions of the fund, contributing 12.97% and 12.62% respectively. Other sectors, including consumer discretionary, industrials, communication services, consumer staples, energy, real estate, materials and utilities, make up the remainder of the sector weightings, each contributing a smaller portion to the overall composition of SPXL. Understanding the composition of SPXL, from its top holdings to its sector weightings, can offer valuable insights into the fund's performance as well as its potential risks. This information is crucial for any investor looking to make informed decisions about their investment strategy. Knowing the composition of SPXL can help you understand its performance and risk profile. Now, let's examine the performance of a hypothetical SPXL portfolio. Imagine an initial investment of $10,000. This investment could have grown to a staggering $6,200,694. The compound annual growth rate, or CAGR, is a whopping 52.8%. The time-weighted rate of return and the money-weighted rate of return are 29.71% and 28.70% respectively. The best year could have seen returns of 118.37%, while the worst year might have experienced a drop of 56.55%. Despite these fluctuations, the Sharpe ratio is 0.78 and the Sortino ratio is 1.22, indicating a good risk-adjusted return. The portfolio's market correlation is 0.99, showing a high correlation with the market. While the SPXL portfolio shows impressive returns, it's essential to remember the increased risk that comes with leveraged ETFs. Please subscribe for more videos like this.